It's time to focus on the editor's cut. And Agam, we speak about two of the biggest weightages, if you will, in market parlance today.
That's exactly what I was going to, introduce both our topics with, well, two big themes in our markets. Of course, the first one is India's largest bank. And the second one is perhaps one of India's largest exporting sectors. These are the two aspects we're talking about. Firstly, of course, HDFC Bank. And then we're also going to talk about information technology, the kind of trends that we can expect going into the new earnings season. Of course, we'll start having all your earnings coming through over the course of the next week. But starting off with the HDFC, yet another surprise, this time again, not necessarily towards the positive issue.
Right, Agam. So, the whole newsroom came to me at one point in time, day before yesterday, and everybody had this question: what exactly is happening at HDFC Bank?
Yeah.
Are we likely to see a very strong Q1? Is the underperformance over? The point that I was trying to make is that Q1 is a seasonally weak quarter. It is there for all banks to see, and HDFC Bank is no exception. Added on top of that is the merger impact, because this is the last quarter where you will see that merger impact play out. July 1st onwards, so the July-September quarter, you will probably see the well-adjusted numbers, and 1 year later, things should start looking better. Now, what has happened at HDFC Bank in Q1 of FY25? You saw your advances shrink by about 0.8% quarter on quarter. Deposits are mostly flat. CASA deposits shrank by about 5% quarter on quarter, largely because of the current account deposits having seen a net outflow of about 42,000 crore. All of this said and done, yes, not such a great set of numbers. Yes, if you look at it from a merger-adjusted number point of view, which HDFC Bank has given for this quarter, advances and deposits are okay. I mean, they're not such a great set of numbers, but about 14.9 and 16.5 on the deposit side. So, okay, okay. But my question is, do these merger-adjusted numbers show the true picture? Now, the fact is that in February, we had Arvind Kapil hold a press conference. Now, Arvind Kapil, of course, has moved on from HDFC Bank since then. But in February, when he held the press conference, he was talking about the intangible benefits of the merger. Yes, you see an immediate boost on the mortgages as soon as the two entities come together. But the intangible element is the cross-sell, right? So let it be consumer durables, credit cards, wealth advisory, or even on the savings account side, where a large part of the HDFC Limited and HDFC Bank customer base was separate. So you start seeing that merger happening. His point was that this will ensure that the growth pushes up quite a bit. It was already pushing it up in February of 2024. So this June quarter number, we have to assume that this merger-adjusted sort of comparison may not be accurate, because the merger-adjusted number might actually be way worse. If you take out the cross-sell benefits that come into HDFC Bank. So, not looking so great. Brokerages are, well, sort of midway there. They're saying, oh, I mean, yes, not such a great set of numbers, but we will probably see some amount of action on the stock. But we are pretty sanguine on the stock. But I think it's way worse.
So, Vishy, the question here is that, when the third quarter earnings came in, that's where we saw deep cash in HDFC Bank. After that, we had the earnings for the fourth quarter, which seemed reasonably okay. The question is that all the concerns that came through in the third quarter earnings, were all of those concerns answered in Q4? Do you think that the bank was turning a corner? And based on that, what can we look at now?
Yeah, so the main concern was on margins. Now there again, the bank has guided. It's not that everything is solved yet. They are in the process of solving it. It's been 1 year since they've been solving it. So hopefully in this quarter's commentary, we will see some indication of what exactly happens going ahead. But considering that deposits have not grown at all quarter on quarter, you might not see that impact on the margin side. The other side is with respect to growth. Again, concerns there, not fully addressed. Q4 sort of got washed over because the numbers were so big that people stopped asking about it. But now that question is going to come back to the table again.
You reckon, sorry, can I slip it a question?
Yeah, absolutely.
You reckon that July, August, September could see a materially different quarter, reportage, texture-wise, than what the previous ones have been?
May not be Q2, maybe Q3.
Maybe Q3.
Yeah, because that's when second half of the year typically is a stronger year for all banks. So you may see that additional benefit, plus the merger benefits playing out later in the year. So most likely Q3 is when we will see that benefit.
Hazard a guess as to how the stock could potentially open?
I am not going to get
open
into
to
that.
both of you, actually.
But no, I think safe assumption that one, it could start off lower based on
Yeah.
what the brokerage notes have been. The
Yeah.
only cushion, unlike the last time's fall, is that there is this technical trigger at the back of the mind of the market
Yes,
that the
yes,
passive
yes,
flows
yes.
might shore it up. So
Yeah.
do you want to go naked short on it as strongly as you otherwise might?
Yeah.
Right.
Maybe not.
Well, on a technical basis, to cover that up, there were a significant amount of shorts covered as far as HDFC Bank is concerned when, the MSCI adjustment, updates came through. Also, it went into a new range after a really, really long time.
Yeah.
So the question is, are investors
They'll
just
go back to where
ready
it was.
enough to, potentially go and press the button and sell those shares or not? Well, that's a wait and watch. But yeah, fair enough. So these are some of the factors that we should be keeping an eye on as far as the HDFC